So from a serious illness point of view, I think that the vitality changes are really strong. They are now going to be providing 3 effectively different levels of cover to their clients, from a super comprehensive and effectively, if we're talking about likelihood of payouts, the most comprehensive plan in the market, pretty much across all age ranges and genders, through to a core option. What Vitality are also doing is introducing and improving the children's cover from where it was. So when that children's cover is added, it's now going to cover all children, which is really good to see. And again, that cover that's being provided is really strong when compared to others in the market. From a longer term perspective, I certainly think it's a more sustainable approach to critical illness, particularly seeing as medical advancements in the future could mean that insurers are paying out vast sums of money for things that actually aren't really that serious. And indeed, that even happens today. It takes away that lottery element of critical illness for me, and means that a client's going to be paid out in line with how ill they are, and the potential impact that's going to have on their life. It's a welcome part because people don't just get ill and then get better and never get ill again. I think it's a simple answer. And particularly with a lot of the types of conditions that are covered under critical illness and serious illness plans. Cancer, for example, it's quite common that someone might get a stage 1 cancer and then that might progress onto something more severe. So the ability to have something when paid out when it's maybe not as severe, and then as any condition progresses, be able to claim based on how severe that comes is a positive for many clients. There's lots of costs associated with being ill, whether that be just travelling to and from appointments, to having to take short times off work in order to go and get medical treatment for a start. So even when being diagnosed with something that might not be particularly life-threatening or severe, there are financial implications of that. And particularly within the Vitality proposition, and the vast ranges of severity levels that you guys can go to, we do see carcinoma in situ covered even without surgery, which is relatively rare across the market, which will enable someone to have something to help them financially, because anyone diagnosed with cancer is likely to have follow-ups, is likely to have potentially some kind of treatment and ongoing support from the medical profession. We all know we're living longer, and as we're living longer, we're actually living with illness in later life. And what the dementia and frail care cover does is enable extra payouts. It extends the life of the serious illness for things like dementia, Parkinson's, and conditions that may affect someone to the point where they're going to need care, whether that be at home or even in a care home. Those things are not cheap, and it's a big societal problem at the moment in terms of how do we fund later life care. Dementia and frail care cover is a prime example of how we might be able to do that. And to me, it is a bit of a no-brainer to add on to your serious illness cover for your clients. From an IP perspective, again, what we talk a lot about flexibility, and we really appreciate plans that provide that flexibility to clients, because ultimately someone's life and their income is not going to remain stable throughout their lives, and there's going to be changes. So having an income protection plan that can adapt to that is really important. And I think some of those changes that Vitality are making are really helping with that. So bringing everything into one plan, and enabling the short-term benefit period payments from 1, 2 and 5 years, and being able to have access to that one through one plan is one really positive move. Guaranteed insurability options are often quite limiting. However, you're bringing into your guaranteed insurability options the ability to change the term of the plan, change the deferred periods, which I think is really important, especially as people change jobs, to be able to match their income. And lastly, possibly one of the most important things within an income protection plan is the ability to help someone get back to work if the worst does happen. And a real positive move is to bring that rehab benefits forward so that people can access it from point of claim, not from the end of the deferred period. I think one of the benefits that Vitality have compared to many other insurers is you have a health insurance arm, and being able to draw upon that to help clients get back into the workplace when they've been ill or injured is a real positive move. I think prevention is really, really important for income protection and all protection plans. The healthier we are, the less likely we are going to be ill. And providing clients with incentives and the ability to be able to make positive improvements to their health and lifestyle is really important. What Vitality are doing with the income protection plan and paying a little bit extra if they've got a higher Vitality status is positive. And for many clients, I think I particularly like the fact that even if someone is only off for a certain period of time, you will still commit to paying an extra amount for 6 months. I think the ability to guarantee earnings is such a welcome part because generally people's income is not stable nowadays. We have an awful lot of people that are self-employed, on contracts, and their income is not stable. It may go up, it may go down. And a big issue in the income protection market specifically is for those where their income isn't stable, what happens if they claim at a point where they haven't been earning as much as they normally or might do normally? For a lot of protection plans, that means the amount that they will get in terms of the benefit paid out will be limited. Vitality's ability to be able to guarantee the amount that's paid out is really positive because it just offsets that risk and provides that client with the comfort that they're going to get paid out exactly what they're paying for. With regard to consumer duty, much of the talk and much of the focus from the regulator is on value. And the way I see it is the Vitality changes and the Vitality proposition as a whole provides value for clients from day one through to the end of the plan. Day one is all about prevention and helping clients lead healthier lifestyles. And what we've seen is changes being made to the flexibility of income protection, so that the plan can remain valuable to a client and keep track with their lives, through to the point of claim where, again, added value is being able to help that client get back to work, to good health through the rehab benefits. And if that takes a long time or doesn't work at all, then they've got the financial benefit of the payout. There's an awful lot that Vitality offer within the rewards program, the Vitality program, to help clients that save money in many instances, from cinema, coffee, through to gym discounts. There's an awful lot there for different types of clients depending on what they're interested in. Again, it comes back to providing ongoing value to clients, and the more they engage with the programs, the more discounts and the better rewards they're going to get. Advisors are now starting to talk to clients about far more than just the core purposes of the plans that they're recommending. They're talking more around the support services that are being offered, through to other benefits that these plans may offer them on a day-to-day basis that might provide them with value straight away, as opposed to having to wait till something goes drastically wrong with their health before they see any benefit.